Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Doing great. President Trump says he's unconcerned as the dollar hits its lowest level in nearly 4 years. Markets now await the Fed, widely expected to keep rates on hold. ASML Reports will bring you the numbers from the chip machine giant, a key bellwether for the AI boom. Plus, the French finance minister warns his G7 peers against unilateral measures after clashes with President Trump on trade. We'll speak exclusively to Roland, Lescure later on this hour. Well, a very good morning. Welcome to Wednesday. And it is Fed Day, but who needs a Fed cut when you've got President Trump saying that a weaker dollar is great? Yes, the Bloomberg Dollar Spot Index, the Bloomberg Dollar Index is back in the green, paring those losses. But the world's reserve currency, as I say, was nearly at its lowest in 4 years. So where did traders head? Gold. We are above that $5,200 an ounce level and still powering higher this morning. That weaker dollar had also helped power the S&P to a fresh record, and futures pointing higher stateside as well this morning. In terms of the risk events on the docket for today, as I say, we've got that Fed decision coming at 7 p.m. London time, expected to hold, defying the pressure from President Trump to cut rates. We also have UK Prime Minister Keir Starmer still in China, looking to improve ties with Beijing. He says he doesn't have to choose between Washington and Beijing. And then later on, a massive day for earnings. 3 of the Magnificent Seven reporting numbers. And can they impress the market is the question. Speaking of big tech, we've just had breaking numbers out of the Netherlands from ASML, Europe's most valuable company. They have fourth quarter bookings coming in at 13.16 billion euros. The estimate was for 6.85 billion euros. So a massive beat there. They have a new share buyback programme of up to 12 billion euros. And we're going to dive into the details of those reports in just a moment. Stay with us. Let's set you up for the day ahead. We begin with earnings here in Europe, and for more on those numbers just released by ASML, Bloomberg's opening trade anchor Tom McKenzie, also host of Bloomberg Tech Europe, joins me now. Tom, just walk us through the key takeaways in this ASML
I mean, Lizzie, report. You said it, this is a massive beat in the fourth quarter in terms of bookings coming through for ASML. My terminal's just gone dead on me, so I don't have the exact numbers, but to your point, let's just refresh in terms of that number. I've revived the terminal, 13.16 billion, it's gone again, 30.16 billion in terms of fourth quarter bookings. The other key headline was the buyback. And that's essential as well. So the key takeaways for me, massive beat in the bookings for the fourth quarter, the share buyback coming through for ASML as well. The key question leading up to these results had been, to what extent is that massive capex that's been put to play by the hyperscalers leading to increased demand for orders for this company's lithography machines from the foundries, the TSMCs of the world, the Samsungs of the world. And it seems like, based on these numbers, we need to lift the lid and look at the granular detail. It seems like that is now translating into increased orders for ASML's machines. Going forward as well, the picture is going to be about those high-NA EUVs. That's their most sophisticated lithography machines. Christophe Fouquet, the CEO, has told me previously, towards the end of last year, he doesn't see those really gaining traction in terms of sales until 2027. I wonder if any of that's being pulled forward, given the demand. Another key question for me is the story around the memory chip squeeze that we're seeing. The likes of SK Hynix, Samsung, they've all talked about this, Micron as well. There is just not enough memory, high bandwidth memory, that aligns with those AI chips. And there could be then increased demand for the kind of kit that ASML supplies to try to increase the production of that memory story that for some, many executives and analysts see not really being relieved until that tightness in terms of the memory part of the market until 2027. So that could also be a lift as well for ASML through 2026.
Well, Tom, you mentioned Christophe Fouquet. You and the team on the opening trade are going to be speaking to the ASML CEO just after 7 a.m. London time. So we look forward to that conversation. We've got a fantastic T-Live running on the terminal, taking us through these earnings. As you say, they use the word a monster bookings number of 13 billion euros. But also we have to talk about what's coming out the Mag 7 today, Tom. Earnings from Microsoft, Meta and Tesla. What are investors focused on?
So I'll break them down for you briefly. In terms of Microsoft, the focus is going to be on the Azure and the cloud in terms of whether or not this massive CapEx spend that they've committed to is paying off in terms of demand for their cloud business that does lead in terms of their competitors. You've got Google coming up behind them, you've got Amazon as well, AWS. But in terms of the demand for Azure, that's going to be key. Also Copilot, which is their AI-infused software that they are shipping to enterprise and to consumers, and whether or not there's a lot of traction there. So I think those are the key two metrics to watch for Microsoft. The stock has ebbed a little bit in the last few months, so there needs to be some kind of catalyst to kind of convince investors the CapEx spend is really coming through for Microsoft. When it comes to Meta, this is a company that is fallen behind the race in terms of the large language models. It is losing on that front. It is winning in terms of the hardware, so the glasses and the partnership it has with Luxottica. But, of course, the key driver of revenues of Meta is the advertising business. So, again, to what extent can Mark Zuckerberg, who said he wants to spend $600 billion on infrastructure through the decade, can he convince investors that that investment is worth it, and whether or not infusing AI with the advertising business is leading to upside there as well. Tesla is going to be less about the cars and more about robotics once again and autonomous vehicles, on what Elon Musk has to say on that front.
Tom, I'll let you go and prepare for your show. That's Bloomberg's Tom Mackenzie, our opening trade anchor, of course, and he'll be back with Guy and Anna in just under an hour's time. Well, still on earnings, LVMH ADRs have dropped after organic sales in the company's fashion and leather goods division fell 3% over the holiday season. Let's bring in Bloomberg's Caroline Gonan for more. Caroline, why have LVMH sales been struggling?
There is a tough comparison basis, which explains some of the declines in the fourth quarter. But clearly, if you look at the key unit, the fashion and leather, which represents about 3/4 of operating income at LVMH, which includes Louis Vuitton, of course, and Christian Dior, the organic sales are down 3% in the fourth quarter, and that is slightly below expectations. Remember, in the third quarter, there was actually a rebound at LVMH after 2 quarters of declines. We thought that was perhaps the end of somehow of this luxury slump. Maybe not quite yet, especially in China. Demand is still quite muted in China. Organic revenues in that region, excluding Japan, is up just 1% in the fourth quarter, even though Bernard Arnault, the founder of LVMH, said last night that this new massive Shanghai store called the Louis, in the shape of a cruise, has been so far a great success. However, the wines and spirits division especially is very much struggling, minus 9% in Q4, a much bigger drop than the 1% we had anticipated. We had a story on cognac yesterday saying that demand of cognac is struggling. They are uprooting vines, they are cutting jobs and cutting bonuses because, of course, you had this spat with China on tariffs, but also you have generally a slowing consumption of alcohol, and that's also impacting this wines and spirits division. Some analysts are even saying that maybe at some point that division could be spun off. In terms of outlook for 2026, Bernard Arnault again saying that 2026 is not going to be a very straightforward year. It's very hard for him to give predictions in the short term, even though he also said he remains optimistic for the midterm.
Caro, thanks for the breakdown. That's Bloomberg's Caroline Gonan in Paris. Thank you so much. Well, back to the dollar moves. It suffered its deepest one-day drop since last year's tariff rollout after President Trump said he didn't think the currency had weakened excessively.
No, I think it's great. I mean, the value of the dollar. Look at the business we're doing. No, I'd want it to be just seek its own level, which is the fair thing to do. You could have it. I could have it go up or go down like a yo-yo.
Let's bring in Bloomberg's MLive strategist, Mark Cranfield. It's great, Mark. You heard him there. Look, the dollar's been having a bad week, recovering somewhat now, but how much of that slide is the Trump effect?
He added a bit of fuel to what was already a dollar downtrend, but basically it's firmly intact anyway. People are coming round to the conclusion for some days that the US dollar was at a turning point and it was going to continue to weaken further. We've had Stephen Jen talking today. He's the man who came up with the dollar smile thing many years ago, and he's a very respected analyst, and he says there's a lot further to go. People are underestimating how far this dollar downtrend has to go. And if you're looking for data to back that up, just look at the currency option market this week. Monday and Tuesday are two of the busiest days ever in the currency option market, dominated by the big boys, the euro and the yen. And when people are really putting on big positions and changing their profile in those currencies, that turns the whole dollar sphere on its head. So you've already had the Chinese yuan for some time. Has been steered stronger against the US dollar. Now you're getting the other G10 majors moving in the same direction. It's really across the board. And that was before Donald Trump had anything to say anyway. There's a major shift going on clearly in terms of where central banks and reserve managers are putting their money. The fact that the gold is at 5,200 again is a shift away from the US dollar into another haven place, which is in the precious metals. So it's happening across the board. It's not simply about one thing. The fact that Donald Trump is also fairly relaxed about where the dollar goes is just additional to what is already a very big theme. We've had some of the European central bankers speaking as well. They're fairly vague on where they think the strength of the euro go, which suggests that since we've touched 120 already this week, that's not high enough. It probably has to go quite a bit further before the Europeans get really worried that the euro has become too strong.
Yeah, gold there at $5,257 an ounce, Mark. Look, we've got Fed Day today. It's forecast to hold later on. But what reaction can we expect from Treasuries after the decision?
Could be quite a lot of volatility in the long end of the Treasury curve. Going into today, into this decision, traders are still pricing for 2 more interest rate cuts this year, even though when you look at some of the speakers from the Federal Reserve over the past few weeks, they seem much more cautious than that. They don't seem to be supporting the idea that interest rates can come down that much further during this year. Now, that is probably based on the fact where traders are pricing is partly to do with the fact that we are expecting Donald Trump to name a new Fed chairman. And presumably, whoever is going to be the chairman is going to be pretty dovish, more dovish than Jerome Powell, we would expect. And that's possibly why traders are still hanging on to the idea there could be more rate cuts. But the current mix of the Fed don't see it like that. It could be quite a bit of pushback today against where markets are pricing. We've already seen some steeping at the very long end of the curve. 30-year yields could be going back towards the 5% area. It looks as though if you're looking for somewhere for a lot of action, it's going to be the long end of the Treasury curve today, and that will probably start with a statement and then continue through Jerome Powell's press conference.
OK, Mark Cranfield, our Bloomberg MLive strategist, thank you. And speaking of the long end of the curve, Japan's bonds rising after the 40-year auction soothed fears about long-term debt. Let's go over to Winnie Xu now in Hong Kong for more. Winnie, what are you watching where you are?
Yeah, morning, Lizzie. As you just mentioned, that the 40-year bond yield for JGB is actually down 3 basis points here after the bond auction drew its strongest demand since March, signaling that investors are still quite interested and have appetite for these long-term bonds. The yen here weakening just a bit after these recent gains. But I would like to point out something very interesting that just happened, because the Nikkei 225 actually paired some of its earlier losses after we got those strong results from ASML, and hence that's really helping some of the chip makers in Japan. Also, just flip the board and take a look at the broader Asia market, because that weak dollar is still supporting the currencies and stocks in our region. Specifically, HSCI here up 2.5%. Also, this diversification going on away from U.S. assets and back into mainland China and Hong Kong. However, would like to also point out that the big drag today is in the Indonesian market, with the JCI index here down more than 7%. And it's coming after MSCI say that they are quite cautious when it comes to the investability of the Indonesian market, and potentially considering a downgrade to the frontier market status. Now, flip the board and just want to show you a very interesting chart that we have today. Basically, we are seeing the South Korean market overtaking Germany's market cap, and it is now the world's 10th biggest stock market, following Taiwan, with that boost from the tech shares amid this whole AI boom. Back to you, Lizzie.
Thank you so much, Winnie Xu there in Hong Kong. Well, still to come on Daybreak Europe, global trade tensions dominate discussions at the G7 finance ministers meeting, and we'll be speaking exclusively to the French finance minister, Roland Lescure. Our interview coming at 6:30 a.m. London time. But first, the UK Prime Minister Keir Starmer heading to China with a delegation heavy on British banking executives. We'll get you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:16 a.m. here in London. And let's check in on these markets because we've seen some massive dollar moves over the past couple of days. Keeping a close eye on the Bloomberg Dollar Spot Index, it's paring its losses against the other major currencies ahead of the Fed decision later. But as I say, it's been at its lowest level in 4 years. President Trump saying he's pretty relaxed about the sell-off in the world's reserve currency, that fueling speculation that it's at the start of a long-term decline. So the Bloomberg Dollar Spot Index here, as you can see, now up 0.2%, but still in historical context, it is weaker. And as a result, traders have been flocking to gold as they continue to do. It's powered past $5,200 an ounce and marching higher yet. But look at Nasdaq futures here. We're up 0.9%. Compare that to S&P E-minis up 0.4%. And this comes back to the ASML numbers that we just broke for you. Monster booking numbers from the Netherlands here, and that fueling the AI boom. Let's get back to the geopolitics now. Another major risk event on the docket today. The UK Prime Minister is in China, accompanied by some of the UK's biggest banks and businesses on his visit, which starts, of course, today. Now, Starmer seems confident that he can do what few leaders have shown the political dexterity to pull off, broadening trade ties with China without raising the ire of President Trump. Let's bring in Bloomberg's Jenny Marsh, who leads our Chinese economics and government coverage for us. Jenny, for China, is this more about optics than substance?
I think that is the bigger opportunity here for China. You know, the UK market is already quite open to Chinese products. It's not like the US or Europe with lots of punitive tariffs, particularly on EVs, which have seen a big boom into the UK. So the big opportunity here really for Beijing is to welcome another major G7 leader coming to Beijing after a long time. It's been 8 years since we had a British Prime Minister in Beijing, and sort of rolling out the red carpet and, you know, having Starmer here sort of ushering in this new era in ties. And I think, you know, yes, China's interested in business opportunities to boost the economy, but I think just sort of showing the world that as Trump destabilizes relationships with US allies, that, you know, that the world is turning to China and things are sort of swinging and becoming more favorable in Xi's direction again, without him really having to do very much at all.
OK, Bloomberg's Jenny Marsh, thank you so much for that as we look ahead to the substance, maybe, out of that visit. Well, coming up, the Austrian Central Bank Chief Martin Kocher says that the European Central Bank must keep all options open when it comes to rates. My exclusive interview with the ECB Governing Council member is coming to you next. This is Bloomberg. A very good morning. Welcome back to Bloomberg Daybreak Europe. Now, the European Central Bank Governing Council member Martin Kocher says the central bank needs to keep all options available due to the unstable global backdrop, particularly when it comes to trade. Speaking exclusively to me here on Bloomberg, he warned that the bank faces still very high uncertainty. I began by asking the Austrian Central Bank governor whether the ECB was already adjusting its expectations for the coming year.
Lots of things happened in terms of trade conflicts, in terms of other geopolitical developments since December. But we knew already in December that the uncertainty levels that we are seeing geoeconomically, geopolitically are high. So it's important to have full optionality. The monetary policy has to be able to react to any kind of risks manifesting themselves quickly and decisively. So it means having this full optionality is an asset, and we agreed that we want to have this full optionality in any direction.
But we were talking about how it feels like a year has happened in a month already. Yeah. Do you think that household and business confidence can withstand this lingering trade uncertainty? Will it dent confidence at all?
What we've seen in December, and I think it hasn't changed, is that the sentiment indicators within the euro area are slightly biased upwards. We see modest growth projections. We see inflation projections in line with our 2% target. So that means, and that's the reason why it has been called being in a good place, but it means, of course, not that we want to be there for all time. It means conditionally on what we are seeing, conditionally on the risk environment, this is where we want to be. But we want to be able to react quickly to anything that happens.
Well, yeah, so in the nearer term, markets are still pricing a small risk that the ECB cuts this year, but further out they're looking at a bigger pricing of hikes down the line. Governor, does that tally with your view?
At the moment, we're in a good place. That is exactly what has been surprising to a certain extent, given the uncertain environment, that we have been seeing quite some stable inflation outlooks. That's the main target. But I think the risks that we are seeing in both directions make it unlikely that over a very long time we are able to stay where we are. That means full optionality is important, as I said, but it's difficult to say if it happens that we stay at the current rate and the economic development remains calm and some of the risks reduce. Then I'm happy, but we have to be prepared for any changes.
How much worse would things have to get for you to back another cut?
I mean, if clearly the inflation outlook is going down, so if we are going clearly below 1.8%, which is the current outlook, then we have to discuss a cut. But it's equally likely, I would say, so the risks are more balanced now that we see a development where inflation outlooks are adjusted upwards, and then we have to think of a hike. But at the moment, we are doing fine.
So that was the ECB Governing Council member Martin Kocher speaking to me yesterday. Well, now to some other top stories we're following for you this morning. The record-setting cold gripping major US cities is expected to intensify this weekend as electricity grids struggle to cope with unprecedented demand. Forecasters say that a fresh wave of polar air from Friday could push temperatures as much as 17 degrees Celsius below normal. A so-called bomb cyclone is also threatening East Coast cities with another round of heavy snow later in the week. Elsewhere, a man sprayed an unknown substance on Democratic US Representative Ilhan Omar during a town hall that she was hosting in Minneapolis, where tensions over federal immigration enforcement have come to a head after agents fatally shot 2 US citizens. In a statement on X, Omar said she's, quote, OK. This comes after President Trump said he's looking to de-escalate in Minnesota, with a reshuffle of the leadership running his deportation effort in the state. In other news this morning, Italian officials have protested US plans to deploy some immigration and customs enforcement agents' staff at this year's Winter Olympics, underscoring how the agency's role in an immigration crackdown at home is stirring opposition overseas. Speaking on local radio, the Milan mayor said ICE agents, quote, are not welcome. This was echoed by Italian opposition leaders, including the former Prime Minister Giuseppe Conte. Well, let's check in on these markets again, because we've seen some whopping great moves when it comes to the dollar. The Bloomberg Dollar Spot Index is recovering some of its losses now, but it was the world's reserve currency at its lowest level in 4 years. The president expressing he's quite relaxed about the dollar's decline. Now, on the flip side, we had seen the euro at its highest since 2021 at $1.20. On the flip side now, it is paring some of those gains, so down 0.4% at a 119 handle now. But take a look at Euro Stoxx 50 futures. Earlier this hour, we brought you the ASML earnings, a monster bookings number, it has to be said. That, as we've already said, is powering Nasdaq futures, and all of this enthusiasm around the AI boom also powering European stock futures higher. We are now at session highs. Well, we've got plenty more coming up for you on Daybreak Europe. I'll be speaking to the French Finance Minister, Roland, Lescure. He's issued a warning to his G7 counterparts amid the global trade tensions, and that exclusive interview is coming up next. So don't go anywhere. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Nasdaq and European futures climb as a huge beat from ASML adds fresh evidence that AI demand is waxing rather than waning. Doing great. President Trump says he's unconcerned as the dollar hits its lowest level in nearly 4 years. Markets now await the Fed, widely expected to keep rates on hold. Plus, the French finance minister warns his G7 peers against unilateral measures after clashes with President Trump on trade. We'll speak exclusively to Roland Lescure in just a few minutes' time. But first, let's check in on these markets because we've seen some real moves when it comes to the dollar, as I say, near its lowest level in 4 years. And here is the Bloomberg Dollar Spot Index paring back some of those losses, now up 0.2%. But we really have to look at the impact of those ASML numbers on the futures picture as well, powering Nasdaq futures higher, and we have had Euro Stoxx 50 futures at session highs because of this enthusiasm around AI. So ASML really reigniting, if it ever went anywhere, that AI boom. On the front pages this morning, the Financial Times has President Trump unbothered by, if not encouraging of, the dollar's recent slide. And one of the reasons for that slide, of course, is the uncertainty over whom he'll nominate to replace Jay Powell as Fed chair. And that's the Wall Street Journal's lead this morning. Their focus is, as we put it last week, that the selection process is becoming a hunt for an elusive unicorn candidate. He wants a loyalist who will cut rates, someone who has credibility on Wall Street, but also someone who's got a shot at Senate confirmation. So hard to tick all of those boxes. Flip over one more time, because here in the UK we have The Guardian. Starmer vowing to be realistic about national security when it comes to his visit to China. But he's really trying to shore up those economic ties with Beijing. Does he have the political dexterity to pull that off without annoying President Trump, you might ask? Well, you can get a roundup of all these stories and all that you need to know to get your day going in today's edition of Daybreak, which, as always, Terminal subscribers can find by going to DAYB Go. Well, the French finance minister has called on G7 counterparts to avoid unilateral action amid trade tensions escalated by President Trump in the group's first meeting since France assumed the G7 presidency at the beginning of the year. French Finance Minister Roland, I'm pleased to say, joins me now exclusively from Paris. Minister, thank you so much for making time. We really appreciate it.
Thank you.
I hope you'll forgive me for starting here. I'm sure many in France are struggling to forget the moment when President Trump mocked President Macron's sunglasses at Davos and threatened tariffs on French wine and champagne. Is France fully over that now? And how will you respond if the tensions escalate again?
Well, as you said, we had a G7 meeting yesterday, and as has been the case for more than 50 years, the G7 is a place where frank, sincere dialogue should take place, and it is taking place there. So with regard to your question, I think we should look through and avoid provocations and focus on the substance. And the substance is that there are global imbalances in the world, that the G7 is willing to address them, tackle them, make sure that we have a balanced growth. And this is what we're going to be working on from now on. So, forget
did you discuss
provocations or
those tariff
strong
threats?
sentences and focus on the substance.
Did you discuss those tariff threats with the US Treasury Secretary Scott Bessent? Did he give you assurances, Minister?
So what I can tell you is that all the ministers, all the G7 ministers were there, the IMF was there, the World Bank was there, and we had frank and sincere conversation. But one of the rules of the G7 that has been going for 50 plus years is that we don't disclose what we talk about. We don't suddenly disclose how we talk about it. But we talk frankly and seriously in camera, and that's what we did yesterday. As I said in my statement, we do believe that frank, sincere dialogue is much better than unilateral operations or actions. I think that says it all.
Where you say about global imbalances, I wonder whether members agree on how to deal with China on trade and the global imbalances arising from that. What are the tools that you can use, Minister?
Well, that's exactly what the agenda is about. As you know, China's trade surplus has gone way above $1,000 billion, 300, third each for the US, Europe, and the rest of the world. And this is obviously unsustainable. We all have our homework to do, the US, Europe, and China. We need to invest more in Europe. There should probably be less twin deficits in the US, and suddenly China has to engage into a more consumption-led economy. And this is what we're going to talk about. We want a diagnosis, we want actions, we want to be able to follow that. I am convinced that if we go on at this pace, we're going to hit some kind of a wall. It's going to be either economic, financial, or political. Because I think our citizens are wary of what's happening in the world. They understand that the world is in a disbalanced way. And disbalance means unstable. Unstable means it can't last forever. So we have to make sure that at the end of the day, G7 is the place where growth and predictability are on the agenda. The G7 has to be the engine of predictable growth, and that's what we're going to be working on.
Minister, there's a growing distrust of US assets. Are you worried about a rapid devaluation in the dollar, even if President Trump isn't?
Well, we don't have the habit of commenting on foreign exchange movements, and certainly France is on the view that it's up to the market to determine the value of the foreign exchange currencies. They base their analysis on fundamentals. I was on the market for 20 years before being in politics, and that's one thing I know is that foreign exchange market should do their job. Finance ministers should do their job to make sure that growth, again, is balanced, is secure, that productivity is strong, and then chacun son job, as we say in French.
But if this is a rapid exodus, Minister, of course it becomes a problem for you. Surely, are you worried about financial stability?
No, financial stability should always be on the radar, and of course finance ministers and central bankers should look into it. Again, I'm not going to disclose the kind of conversations we have in camera, because that's the whole strength of the G7. But, so far so good. I think the world certainly faces major uncertainties, but we haven't seen any unstable or rapid movements that are of concern. But obviously, we're monitoring the situation, as we always have. We're aware of the movements. And again, we have to make sure that predictability and stability are the important words of what growth should be about now in the world.
And are members concerned about the slump in the yen? Can you rule out, or indeed rule in, coordinated G7 action to support the yen?
Well, when I look at foreign exchange currencies, as I did when I was looking at stock market or rates, I like to take a bit of a bigger view. And when you enlarge the focal and you look at the recent movements of the yen, you feel that the recent strength of the yen has been pretty small compared with the overall devaluation that has taken place over the last 18 months. Again, this is a trend that the markets are pricing in. It reflects different fundamentals in Japan, in Europe, and in the States. The markets do their job, and I believe they do it quite well, so we may as well let them do it.
And turning to matters domestic, Minister, the French budget's on track for adoption after the Prime Minister, of course, survived more no-confidence votes. Are you satisfied with that outcome, given that the deficit will only fall to 5% of economic output?
Well, it's a start. We started this work in October. At that time, the spreads between the OAT and the Bund were significantly higher than what they are today. After yesterday's formal adoption by the lower house of the parliament in France, we still have to go to the Senate and back to Parliament, so it'll probably be another week before we have a final adoption. But after yesterday's vote, the spreads between OAT and Bund is smaller than it's been since June 24, which was the snap election. That says something, again, about the credibility, about the lowering of the political risk premium, and of the fact that we're on track to fiscal consolidation. So there's still a lot of work to be done, but we were on track with what we had planned last year, and we will be this year.
Does that say that the crisis is over?
Stability has got a value, and I think it's being priced in at the moment, and I value that. There's going to be an important election in about 15 months from now, and between now and then, our job is to make sure that there is political stability, that there's fiscal consolidation, so that candidates can then propose French people with, hopefully, ambitious programs that they can pick from. And in the meantime, we're going to be working to make sure that France is stable, that the G7 works well, and that, France and the world are in a better place. And there's certainly enough uncertainty that there's a lot of work to be done between now and then.
Well, yeah, I'm struggling to imagine how you'll reduce the deficit in 2027 when, as you say, it will be an election year. Will you get rid of the extra tax on big business?
you know, we have a budget this year, 26. That's a budget of stability. As you said, we're lowering the public deficit. We are doing 50-50 expenditure cuts and a bit of tax increases. We're going to have to work on the 27 budget, but give me maybe a week or two to enjoy the fact that we have passed the budget for 26, that we have respected our targets for 25, and that, yes, there's more work to be done, but so far so good, let's admit it.
I know you've maintained a tax on large companies that was meant to be temporary. Is France still pro-business?
It is, and I'm here hopefully to convince your auditors that we still are. We've been the most attractive place in Europe for the past 7 years. Barclays Bank has just announced that they're moving their headquarters to Paris from Dublin, and we want many more. I think fiscal consolidation and political predictability and stability are two important parts of the parameters that people are looking at when they look at France. We want to streamline procedure. We have a great labor market. We have improved the functioning of the labor market. We have fantastic engineers, traders. AI is on the verge of a big boom in France. You know that France is the place last year where there was the biggest amount of investment in data centers from foreign investors in the world. That says something about what's going on in France. So again, look through the waves, look at the fundamentals. France is doing better, and we're going to make sure it keeps on doing so.
Minister, finally, I know that President Macron and Canada's Prime Minister Mark Carney are close, and Carney really went there at Davos when he talked about the rules-based order fading. Of course, Canada now facing more tariffs from President Trump. Do you agree that middle powers have no choice but to club together, to stand up to that intimidation potentially from bigger powers?
Well, I know Mark very well. Used to live in Canada. I'm actually Canadian as well as being French, and I'm impressed by his ability to describe the world as it is, as he said, and not as we hope it would be. The world is on the brink of a major change, and we both have to work on making it still a safe place where dialogue is possible, but also taking stock of what's happened already. This is a world where multilateralism is at risk, and where, yes, coordination and cooperation between what he called, mid-sized powers has to be stronger than ever. And France and Canada, and I think the EU and Canada, have a good relationship that needs to keep on growing, and I'm certainly happy to be part of that relationship as a French Canadian.
OK. Minister, we really appreciate your time this morning. That's the French Finance Minister, Roland Lescure. Thank you so much. Well, taking it back to the earnings picture, of course, earlier this hour we broke those ASML numbers for you. The stock appears to be gaining on Tradegate ahead of the European cash open. It was a huge beat when it came to order bookings. Fourth quarter number coming in at 13.16 billion euros compared to an estimate of 6.85 billion euros. They've also announced a new share buyback of up to 12 billion euros by the end of 2028. We're also looking at LVMH falling on Tradegate compared to the Paris close after they reported the sluggish fourth quarter sales. Well, coming up on the programme, the Fed expected to pause its rate cuts later on today. We'll be discussing that and the dollar weakness with our next guest, so don't go anywhere. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to our top corporate news this morning. SoftBank is in discussions to invest as much as $30 billion more in OpenAI, reflecting founder Masayoshi Son's ambitions to play a central role in developing artificial intelligence. Bloomberg understands that the Japanese company is in deliberations to commit more capital towards the fast-growing startup, but discussions are fluid and the amount of funding could yet change. Elsewhere, Elon Musk has reportedly proposed timing SpaceX's IPO to coincide with a planetary alignment and his birthday in June. According to the Financial Times, SpaceX is targeting mid-June for its IPO, when Jupiter and Venus will appear close together. Sources told the FT the company is seeking to raise as much as $50 billion at a valuation of roughly $1.5 trillion, which would make it the largest IPO in history. And Texas Instruments soaring in late trading after giving a surprisingly robust forecast for the first quarter, indicating that demand for industrial equipment and vehicles is recovering from a rough patch. Revenue will be up to $4.68 billion, exceeding average estimates. And President Trump's latest comments brushing off the dollar's sell-off is fueling speculation that the greenback is at the start of a longer-term decline. We can dive into the markets and the Fed decision on the docket for today now with our guest, Hetal Mehta, Chief Economist at St James's Place. Hetal, really good to have you back on Daybreak Europe. The President seems to be embracing this dollar weakness. Is he basically getting his rate cuts by another means? Good morning.
I think in some ways he is, but we have to remember that weaker dollar actually means higher inflation, and that could potentially make it harder for the Fed to cut rates. So yes, the weaker dollar should help exports, and we know that that's one of the kind of stated aims for Donald Trump, but actually if it starts bringing in more goods inflation, then that's going to be, I think, problematic for the Fed.
Well, if dollar weakness persists, how much will it change the rate paths of the central banks here in Europe?
So I think typically if that means stronger currencies here in Europe, then that would actually give the ECB and the Bank of England potentially a little bit more bias towards cutting in order to keep their currencies competitive. But remember, we still have a little bit of sticky inflation, particularly here in the UK. So with the Bank of England, it might be welcome because that actually helps to bring down inflation here.
OK. In terms of that Fed decision later, political pressure aside, Hetal, should the Fed be done with cuts when you look at the data?
So when we look at the data, there's a very strong case for thinking, the economy is very resilient. We had a number of shocks last year. The consumer has managed to keep on going despite the slow labour market, despite savings being run down. Some of that is really reliant on the wealth effect from markets being quite buoyant, helping to keep spending going for the wealthier households who account for the largest share of spending. On that basis alone, you'd think, yes, the Fed probably can afford to ease up. So we had 3 risk management type cuts last year, and so you could argue that, but it is worth remembering that rates are probably still a little bit above neutral. We do have that kind of maybe some kind of fragilities in the system that I can imagine it still remains a little bit in the balance whether the Fed should be done altogether. And that uneven recovery that we saw last year does leave some kind of fragilities for the Fed to kind of at least keep the options open.
Hetal, Bloomberg Economics has run the numbers on TACO, and they've calculated that President Trump only carries out 27% of his tariff threats. We've got a fantastic chart showing how they arrived at this number. Given that his tariff threats are still coming thick and fast in 2026, viewers can see the chart now. How much do you expect the lingering trade uncertainty to weigh on European countries and economies this year?
So, as your analysis shows, it is highly erratic, and it's highly likely that the tariffs, even if they do go ahead, that they are dialed down later on, watered down, trade negotiations. So I do think that there is this, trend for us to be overly worried about short-term pronouncements. But it's probably more worrying that we have the erratic policy making, and then that's really questioning the kind of economic framework of the US economy and the institutional integrity of so much uncertainty. And I think that's probably more worrying for long-term investors.
OK. Hetal, thank you so much for joining us on Fed Day. That's Hetal Mehta, Chief Economist at St James's Place. Well, coming up, we'll dive into the risk events on the docket for today, so don't go anywhere. This is Bloomberg.
We're at 3.5, 3 3/4. The neutral rate is, I think, 3/4 to 1% real, and then another, add the inflation rate, 2 3/4. with inflation still running at 2 3/4 and the expectations of stronger GDP growth, i.e., which may help the job market, I don't think they want to move until they see demonstrable evidence that inflation is improving. If they see that this year, they'll move, but they don't want to act until they see it.
The Goldman Sachs Vice Chairman and former Dallas Fed President Rob Kaplan speaking there. Let me take you through the risk events on the docket for today. Of course, we've got that Fed decision coming at 7 p.m. London time. Then we also have Keir Starmer, the UK Prime Minister, visiting China. And later on, 3 of the Magnificent 7 reporting earnings: Meta, Microsoft and Tesla. But let's dive into some charts to take you through all of those. The first, the Federal Reserve is expected to hold despite the pressure from President Trump, as you can see. But flip the board, and we've been discussing the theme of the day, which is, of course, dollar weakness. President Trump saying that it's great, and he seems quite relaxed about that dollar weakness. And you can see here just how bearish traders have been. This blue line here, the bets on the dollar. And so you could ask, actually, President Trump not getting his Fed cuts, but is he getting something of an equivalent by talking down the dollar? Flipping over, and of course, we also have earnings. We've already had earnings from ASML this hour. Just to recap, that monster bookings number for the fourth quarter coming in alongside them announcing a new share buyback of up to 12 billion euros by the end of 2028. That has sent Nasdaq futures higher, Euro Stoxx 50 futures higher. And as you can see here, ASML, even before these numbers, was outperforming the Mag 7, TSMC and European tech. We also, of course, get those Mag 7 earnings. So flip the board one more time and you can see, just put those Mag 7 performances into context. And the white line here is the Mag 7. Compare that to global peers and US peers, and still looks like an outperformance to me, even though some have been calling it the Mag 7. But look, to get all of these charts and all the charts that we use right here on Bloomberg TV, just type CHRT TV Go on your terminal and you can find them all. But coming up here, we are going to be speaking to the ASML CEO, Christophe Fouquet. He'll be joining the opening trade to talk through that bumper earnings report from the AI bellwether. He'll be on the opening trade with Anna, Guy and Tom, and they'll take you all the way to the European cash open. Stay with us. This is Bloomberg.